Let's take a look at the 1 hour now, the actual entries that we could actually get. It's again that 1, 2, and probably level 1 is not yet finished. That's at least what's showing on that 1 hour chart, or it could be finished as an AB, then a CD, and an E. So we did get a correction down into 2. If this is really the case, the current correction will only take you to test the top of level 1, which is 2832, 2850 are really excellent entries. Here we'll only use one entry. We do not really need to subdivide the entries because it's not an expensive item to buy into like Bitcoin. Bitcoin is very expensive price, and you really have to do heavy funding, strong funding. Everything will make a difference regarding the profit and the yield, that of course relating to the size that you're going to buy. With Ethereum, it's a bit more easy to buy into or compact, so we just buy 50%, 2832, maybe 2850. Now we could consider we get a bounce all the way to 2730, but if we don't get that bounce and we are only filled at half size at 2850, then we miss out on the move itself, and we know that that shoulder will really take you to 2850 over here. That is the left shoulder. So we would consider to buy full size 2850, 2830 should take you to 3200 immediately, with a stop just below level 1 and above level 2, 2400. So you're looking at $420 risk per coin. Of course, you could do hedging. If the market falls below that head in the first place, 2500, you can have an equal amount of sells equating with your buys. You let the market move lower as far as it pleases, reverses, and as it moves higher, you close out your hedges on any profit you can get once the momentum is positive, and hold on to the longs. So instead of using stops, but it's everyone on their own risk preference. If you want to use a stop, you'd have to have it at 2400. It's about $400 risk, or 4% risk on a $10,000 account from your entry, or $400 per coin. Let's take a look at the real market live and see what kind of correction we are now getting into. So we have, this is the same label that we have on our own charts. We could actually simplify life for us and have that one here just to make it an L structure. This is a 1, 2, a 3, and a 4, and a 5, but in reality, in an ending diagonal, you are 1, 2, 3, 4, 5, just 3 swings. So we would consider that we've done the first swing in leg A, in leg 3, I'm sorry, the first swing in leg 3. This is the 1 hour chart. We've done the first thing in leg 3, and we're correcting that swing in leg 3. In any ending diagonal, the market pattern will overlap, meaning that, of course, if you are looking at an L structure, the bounce should come at the top of a level 3. But this is an ending diagonal, so the bounce can overlap, the price action can overlap. Market can drop all the way below level 3. There is really no problem. You can get to fill 2785. You can get to fill 2835. These are the best again. We think the best entries. Stop is just take this a bit lower, below level 2. Takes you to 2300, so let's keep it as it is. It's 2400, I guess, just at level 1. You would consider to do a hedge below level 2. So how I would manage is have this. If we break below this level, something is wrong. Until we get to understand what is wrong, and we do re-evaluation of the not only the analysis but re-segregation in terms of proportion, because maybe the growth has reversed. You would want to have a sell stop for equal to your buy amount at this arrow here, 2500 to be exact. So that would open automatically, and you have a fixed negative PL until we are confirmed why there is a deeper correction. It could be the market decides to do a second head and will move higher again, and so there's really no problem. You let the hedges run. After that second head is done, reversal, you close out the hedges on positive momentum, at least on the 5 and 15 minutes. Take in the money profit and hold on to your longs as the market moves high. When you close out a hedge, you will again have another sell stop below the market low that has been recorded. I would only close out a hedge if there is dual positive momentum, meaning positive momentum on the 5 and 15 minutes. By that point, I'm usually not making any money on the hedge. I'm usually zero, or making very little money on the hedge. But it's better safe than sorry. Alright, we could of course go into this internals 5 minutes and 15 minutes and do the projections for the corrections, but I know now everyone can do that on their own. It's just like what we've done with Bitcoin, and you would use all of these projections here. We're having, this is a 5-minute chart, just like Bitcoin exactly. We're having an internal 1, 2, and 3, so I'm sure everyone can do that. And instead of simply having buy entries at by limit orders at 2,850 and 2,735, or whatever these levels were that we're looking at, you would actually have exact projected levels out of that 5-minute chart, and buy once you have double positive momentum showing on the 5 and 15 minutes at any of these projected levels where we consider the correction is going to end. 2,835, 2,780. So the bounce can take you down all the way. This can go all the way down to 2,780, 2,770, no problem. We monitor on the 5 and 15, just like 15 minutes, just like we're doing with Bitcoin. Once we get positive momentum at any of these levels, the market becomes a buy, and the stop is just below the market low, and we know the target is 3,200.